Okay, let's get started. So I need to share my screen and hopefully, what's happened there? Bear with me 1 second. That's not what I wanted to share. What have I done wrong? That's what I want to share. Okay, so hopefully you can now see my 15-minute chart on gold.
Yeah, I can see it.
Okay, good. Right, so I've already put the field of play on the chart, but I'm going to show you how I set that up, just in case there are people on Facebook that haven't done this before. So let's assume that you've got the free version of TradingView and you want to put the volume profile on the chart. So what you need to do is, can you see my cursor on the left-hand side? If you go down, that's number 1, number 2, 3, 4, 5, 6, 7. Number 7 there, if you hover over the arrow, it says prediction and measurement tools. And then you get a drop-down menu, and on the last item on that is fixed range volume profile. So if you click on that, it allows you to go to, I use yesterday's point of control. So what I do is I click on the first candle of yesterday. You don't have to click on the candle, you just need to be above or below the candle. And then go to the last candle. Now, I'm not entirely sure this is going to work because there was a bit of an issue. Oh, there it does. There it is. What I was going to say was a bit of an issue on the global prime price feed yesterday. It did something really strange after 7:30. That was a 7:30 candle, and then it just went a little bit haywire. And if you, just to show you what I mean, if you look on the Oanda price feed, for instance, it actually had the last candle as being the 7:30 candle. So the 7:15 candle, which would have finished at 7:30. So as far as Oanda were concerned, trading on gold finished at 7:30. And I think that was the same on other price feeds as well. I'll look at Forex. And yeah, they finished trading again at 7:30. And for some strange reason, Global Prime, which is the price feed that I use, just did this odd thing showing that price went down. But as far as I know, people wouldn't have lost out on that, because when I tried to look at trading on Global Prime, on my MT4, it came up as market closed. So the market had closed at that point where my cursor is now. So we can ignore this because you couldn't have got involved in a trade anyway. So what I've done is I put the volume, I put yesterday's volume profile on from the opening candle to the closing candle. And that gives me a point of control, which is actually hidden underneath this. I'll just move this. Just move this out of the way. You see this red line here is the point of control for yesterday, and that's what we use for today's target. So what I've done is I've superimposed a ray, horizontal ray over that, and that gives me what we call the field of play, this yellow shaded area here. So you've got the value area high, which is the top of the 70% here, and the value area low, which is the bottom of the 70% there. And this in between is our field of play, and the red line is our target. So we'll just have a quick look at what has actually happened so far today, and then we'll go in a bit more depth. This was opening today, and it opened well outside the field of play. And in the early hours of this morning, as far as we were concerned in the UK, it stayed out of the field of play. Now, the thinking behind this V70 strategy is that price very often returns to this target. And what we do is when price is in the field of play, we look for trades up to the target from down here and down to the target from up there. Those are actually the safest trades. There are other trades that you can take, but we'll just stick with that for any newcomers at the minute. So we're looking for trades from the value area low to the target, and we're also looking for trades from the value area high down to the target. So at 8:30 this morning, we got an opportunity because price came into the field of play and was heading, we could only assume at that point that it was heading to the point of control. It's a fairly reasonable assumption to make because, as I said, price often, very often, goes to the point of control. I actually got into a trade this morning at 8:30 when I was watching Kevin's live session. I noticed that we'd actually, price had come into the field of play, and I got out of that. Sorry, I got in a little bit early, but I got out when it got down to the point of control. It did actually go a little bit further, but I'd set my take profit at that target point, and I got a very nice 41 pips, which was more than enough for today. But I've been watching it this morning, and it's done what we would expect it to do. It's still hovering around the value area. What it has done is it's gone up to the edge of the value high area and out, and then come back in again. And again, it's touched the target. It's gone down to the value area low, and then it's come back up and touched the target. And now it's currently outside as it was here. And it'd be reasonable to expect price at the minute to drop back down to this target. By the way, don't take my word for it. I may be wrong. I've been wrong before, but I've been watching gold for so long now that I get a good feeling what's likely to happen. So I would say that for the minute, I would say that this price is going to come back down to this target. There is a factor that we need to bear in mind, and that is the time. The current time is 13 minutes past 1 in the UK. So we're about 17 minutes away from New York opening. And since New York was closed yesterday because it was a bank holiday, we need to be careful what's going to happen. Price may well be shifted either upwards or downwards or both, as often happens. Sometimes it'll shoot up and then shoot back down again, or it may shoot down and shoot back up again, but we just need to watch that. And the other factor I want to mention is the fact that the situation in the Ukraine is likely to impact on the price of gold and the dollar, and that situation's developing as we speak. So you need to be aware that that might affect price. I'll just move that along there. So first thing I do, before I take a trade, I will look at this chart and I'll go back. I'll look at the 1 hour chart and I'll go back and see. I'll just reset that. There we are. I would look back over the last few days, and the first thing that strikes me about this is that price went down to this low here last Tuesday, and ever since then, it's been in a steady increase. It's been rising up until this morning at 8 o'clock when it started to reverse a little bit. But what that tells me is that generally we're in an upward trend over the last week or so. And in fact, if you look at the daily chart, you can go back to this low here, this low point here, which was the 9th of August last year. And with the exception of that large wick, it's actually been trending upwards since August. So that sort of gives me the background of gold and the US dollar. It is steadily rising, and I don't know if anybody was on Kevin's session this morning, but he did something that I showed on my quick 5-minute session yesterday, which is if you look at this this blue shaded area here, which is all of yesterday's trading happened within that blue shaded area. That was the high point and that was the low point during that 24-hour session. What I did on my 5-minute session yesterday was I did a slightly different volume profile. I used a different time scale. What I did was I went back to this 10th of February where price wicked down, and that was the lowest it had been for quite a while. Maybe I could have chosen that one there, but I'll just repeat what I actually did. I got the volume profile and I started it there, and I went up to the high point, which was there. And I get a completely fresh volume profile. Now let's look at this and have a look at what it's telling me. Or at least this is what I see when I look at this. So we've got here the peak of trading over this period. So this is from, I think it was last Thursday through to the start of Monday. No, the end of Monday, sorry. So from Thursday, Friday, no, I'm telling a lie. It was Thursday the previous week. So Thursday the previous week, all of last week, and then up to and including Monday of this week. So it's a few days. And what we've got is we've got a new point of control. It's actually probably it's identical to today's point of control. You see that red line there? That's the point of control for that several days period, and it actually coincides with the point of control that we'd already got marked up for yesterday. So that's the first thing to notice. It's obviously a very strong, I would call it a magnet for price. Price is going to want to return to that price, to that level. So we're looking at 1896. Was that? No, it's around about 1896. It's going to want to return to that. And then the other thing that I see when I look at this volume profile is, you see how that was quite a large peak. That was the largest peak over those few days. But right straight below it, there's no activity whatsoever. And I've marked this area here because this is something that Paul would call imbalance. In that area, it's all been buys. There's a green candle there, and there's nothing. There are no sellers in that area. So this is again an area that price is likely to return to. There's been entirely buys in that area, and since then there's been no sells. So we know that areas of imbalance, price does have to go back to that point at some point. We don't know when, but it will go back at some point. And then there are other areas of interest. There's a peak in volume here. And if you just look across from that peak, you'll see that there's an area of consolidation there. And there's another area of consolidation there. What that tells me is that price is likely to go back to this area. And similarly here, there was a peak, and in between those two peaks, there was an area of consolidation there, and there's another area of consolidation there. So what I'm seeing when I look at that is these are other potential targets. The price, if it breaks out of this value area, it's got one or two, it's got three, it's got 1, 2, 3, three key areas where it is very likely to go back to. And if I just remove this and go back to a slightly different volume profile, if I put on the, you need a paid version of TradingView to use this one, but this one is called VPS3, which is session volume. So this automatically works out the volume profile for each session. So each day's session in this case. So that is one volume profile. That is Friday's volume profile. That is Thursday's volume profile. That one's Wednesday's, and so on, so on, so on. And the reason I use this is because if you sort of zoom out a little bit, what you can see here, these blue lines actually represent outstanding points of control. So just as today we've got our point of control marked in red, there are other outstanding points of control. And again, these act as magnets. I think it's safe to say that price will come back to that point, and that point, and that point, and that point, and that point. We know that, and the only thing we don't know is when. Let me just check something. I'm just wondering if I've allowed people to get on because there are so few of us. Just bear with me 1 second. No. Right, okay. So this is what's going through my mind. I think that for now, today's price is going to bounce around in this value area that we looked at the beginning. But I need to bear in mind what's going to happen if it leaves that area. And so far what we've done is we've looked at potential areas of interest to the south of the price, so to prices below the current price. And so we've got a number, and we can mark these off. We can put these as potential targets. But what you've got to bear in mind is that it could be months before price returns to any of these points. We just don't know when it's going to return. We can be fairly sure it will return. And if it does break out of this field of play, I will be looking at a target, a take profit target at the top of that imbalance zone, and I would take a trade to that point and then see what happens, see whether price actually keeps going and breaks through, and then I'll be looking at maybe going down to that, taking a profit at that point there. Or well, the other thing it may do, it may come to that point and then bounce off it and go back. So we've looked at what's going on at prices lower than our field of play. The other thing that I bear in mind is it's possible it might break out and go further price might increase. So what I've also got is I've looked back to, well, as you can see there, there was a previous high on the 6th of August 2020. There are no outstanding points of control north of this. Well, there's today's point of control, but beyond that, there's nothing any higher. They've all been taken out. So what I've done is I've marked these black dotted lines, and that was the previous high. That was the highest point I could find prices been to. And that was, I'll say, was not last August, but the August before. And then there are others. I haven't marked what the dates were, but I've just marked them out for future reference. I was looking at this yesterday, I think, was it when I did the 5-minute 5-minute live. At that time, there was a dotted line there, and there was a dotted line there. And if we look in a bit closer, you'll find that it's already taken out one of those lines. So price has actually gone through that first line. So there's a possibility that if price breaks out of the value area, it'll go and take out this one, and this one, and this one, and so on. But you know, again, we don't know when that's going to happen. So we've looked at the big picture. Let's go back and see what's currently happening. And I'll also explain how I go about entering trades using this volume profile. So we'll just look at today. Let me get that. So we're just looking at today. This is the beginning of the day. This is where we are now. We'll go down to the 15-minute chart. I take most of my trades on the 15-minute chart. I keep an eye on the 5-minute chart just to see if that gives me any fresh information or any further information. And I've also started watching the 1-minute chart because Jeff Goodwin has been doing some trainings using the 1-minute chart, and it's a bit of a scalping strategy. But if you look at what the first thing that occurs to me when I look at that is it's really choppy, and it's very wicky. There's lots of long wicks, and it's up and down. But I guess, you know, if you've got the skill, you can grab a few pips on each of those moves. But I'll stick with my strategy at the minute, which is 15-minute. I look at the 5-minute for any additional information, but I generally trade off the 15-minute chart. Now, we're 2 minutes away from opening, so we might see some interesting moves here. We just need to wait a couple of minutes. So we've gone out of the field of play. Contrary to what I said, I thought it might actually come back in. So if I was, let's assume that it's going to stay outside of our field of play. Now, if you were just following the basic 3-line strategy, that would mean, because it's gone out of this yellow shaded area, that would now mean that you're not in a position to take any trades. The 3-line strategy is trading within that value area. So we're now outside the value area, and we need to look at it from a different perspective. What I did a couple of months ago, I watched a lady called Anastasia on Go Live, and she did a 5-day boot camp, and she was teaching trading using volume profile, but she was trading away from the point of control. So she would have this target, well, she would have this line, a point of control, but it wasn't a target. It was a target for her to get away from. She would only take trades that were moving away from that target. So this is slightly different to the 3-line strategy, but I'm finding it works for me. And so what I do, if I was looking at this candle here and I was thinking, right, are we getting in for a buy? Here we are, 13.30. It's 1:30, New York opening, and we're starting to get some movement. So if I was using Anastasia's strategy, I would see that this candle is well away from the point of control. So this is a valid candle to consider getting into a trade. I would then revert back to my 3-line strategy checklist. And to do that, I would need the Ninja Matrix. So as you can see, we've got a green Ninja Matrix up. So that's confirming that we should be looking for a buy. I'm just going to check my settings. Yes, I'm on the 15-minute chart, so my matrix time frame needs to be on the 1-hour setting. So that would be my first box ticked for getting in for a buy. I've got a pretty strong green candle. I've got a green Ninja Matrix background, and I've got the Ninja Matrix up signal there. The second thing I would look for was I would add the indicator, the Ninjicator, and in order to use that, I need to change the candles to Heikin-Ashi. And so here's the second box ticked on my checklist, because we've already had a Ninja up. We won't get another Ninja up because the next Ninja indicator will be a Ninja down whenever that happens. So you've sometimes got to look backwards for the Ninja up. So we've got a Ninja up, we've got a Ninja Matrix up, we've got a pretty strong candle, which incidentally is just wicked through one of my lines, and it's reverted back to the line. So there's obviously something happening there. That's possibly a resistance line. So what we're then going to start thinking about, if we're going to get into this trade, there's one box ticked, there's a second box ticked. Now the third area I look for before I jump into a trade is I look at the moving averages, and I use the yellow line there, which is a 5 MA. You can adjust your settings to how you want them, but I've got mine set to the 5 MA, which is a yellow. I've got the trend change MA, which is changed from red to green, and that's the 13 MA. And my orange line is a 20 MA. And what I look for before I get in a trade is for the yellow 5 MA to be above the 13 MA, as it is there. And I would consider getting into a trade under those conditions. I would ideally like the 13 to be above the 5 MA to be above the 13 MA, and for the 13 to be above the 20 MA. But that's not absolutely crucial. But you will see if you do a bit of back testing, you'll see that is actually quite a strong signal to buy or to sell. For instance, here we got a Ninja down, we got a Ninja Matrix down, we had the yellow MA below the red MA, and then at this point here, the red went below the orange MA, and that was quite a strong signal that you were in a fairly safe selling situation. There was a bit of hesitation at that point, but it did go down considerably. And that was because the yellow was below the red, which was below the orange. So I look for a ninja up, I look for a ninja matrix up, and I look for the yellow 5 MA to be above the 13 green MA before I consider. Now, I've ticked all those boxes, and the only reason I'm not getting into this trade right now is because price has hit a point of resistance. It wicked above it, and then it came back. And that tells me that whenever that line was drawn from, I would need to go back and check. But at that point, there was a strong resistance at that point. So we need price to overcome. We need it to blast through that resistance, and possibly to then come back and retest it, and then it becomes a support, and then we look for price to go up. Let me just think this through for you. If I was taking, if and when it does break through, and I enter for a buy, where would I set my stop loss? Well, my favorite position is just below the PSAR, which is down here at the minute. That's the safest stop loss. You could possibly take a tighter stop loss and look at a previous low, and that one there was a possibility, but I would stick with the PSAR. I would stick with a stop loss slightly below that. So I'll be looking at sort of 1892, that sort of position. And in terms of what my target would be, well, here's a target. Today's point of control. Remember, this is yesterday's point of control, which we use as a target. But there's another strong position here. This is where this is where the peak of today's trading has occurred. So that is quite a strong, it will act as a strong magnet. Once this price breaks through this level here, I suspect it'll retest and then shoot up to that, at least up to that point there. It's taking its time. I'm very surprised at 1337 that there's not a bit more action. That might be something to do with the fact that New York was closed yesterday, and they might still be getting into the swing of things. Are there any questions on anything at all that I've said? Because I've realised I've waffled on and not allowed anybody to ask any questions.
No, I don't have any.
Okay, so I'll take it that everybody understands what I've said. Right. Okay. So that noise you heard wasn't me. That was my dog stretching under the table there, just letting us know that he's here. Right. So until something happens, there's not a lot more that I can talk about on this particular chart. What I can move on to, if you like, is I'll just move you guys out of the way. Jeff's V70 strategy is something that works on other pairs as well as gold. I've got into a situation over the last few months where I now only ever trade gold, because I can hit my daily target with just the one pair, and I tend not to get involved in anything else. But because we're talking about the V70 strategy, I've got highlighted here these sort of pale blue, turquoise, whatever you want to call them, flags are highlighting the pairs that Jeff trades using V70, and we're currently looking at gold versus US dollar. But everything that I'm teaching here on this particular chart also applies on all of these. So this one is silver. You've got the NAS 100, SPX 500, US 30. Now I'll just have a look at those three with you to show you how this would operate. So I'm keeping half an eye on this price, because if it does break through, I want to come back to this chart. But if we look at if we look at silver, silver behaves very similar to gold. You can see you could quite easily mistake that chart for the chart we were concentrating on before. It's very, very similar, and silver behaves in a very similar way. Now, look at think first of all about these three pairs: NAS, SPX, and US 30. These are all American indices. So we'll look at the NAS 100, and you'll see that this is actually working in the opposite direction to gold. NAS is turning down. It's looking like it's going to go for a sell. We've still got that blue line there is yesterday's point of control. That would be our target if we were using the three-line strategy. So there's yesterday, there's the point of control. So that's our target. We haven't got the three lines, but we've got the target line there. So if we extend that, you'd be looking at a target of from where it is now down to that point there, and then keeping an eye on that one, which is today's point of control. And I think I just saw another one sneaking up there. That's an outstanding point of control. So if price was to turn around, that would be another target. But the point I was trying to make was SPX 500 is almost identical, and US 30, now this one may be different. No, it's actually similar. Those two are almost identical to each other. US 30 can sometimes vary a little bit, but the three generally work in parallel with each other. So if you were looking at trades on gold, and I'm just going to go back to keep an eye on it. No, it's not going to move. If you were looking at using this V70 strategy on gold, you could duplicate that if you want to. You could use it on NAS, SPX, US 30. You could use it on US oil, which I'll go have a look at now. That does tend to behave slightly differently. But again, you've got the points of control. You've got yesterday's point of control here. So this will be our target for today. If we drew the three lines on, the three lines would begin at the top of the blue and end at the bottom of the blue there. So if you wanted to draw the lines on, you could use that as a target. And I missed one out there, which is German 30. This is similar to US 30, except this is using the top 30 German companies as the indices. So there's the top 30 companies in Germany. And what that shows me is that there's yesterday's point of control, which is almost identical to today's point of control, but there is an outstanding point of control. So our target would be here, just above where price is now. And then if it moved out of the field of play, we'd be looking possibly for it to go up there, or if there's an outstanding point of control below. No, there isn't. So you get where I'm coming from. There's a UK 100, which is another name for the FTSE 100. You could trade that, and there would be a target from yesterday. So this will be our target, that line there. The field of play would be this blue area. There's a possible target there, which is today's point of control. So what I'm trying to show you is that that's a line from an old discussion, that you can trade. You can use this V70 strategy on any of these 12 pairs, and I've tested them. I've back tested them, and they all work. It's France 40, so this is the top 40 French companies. the euro, the top 50 companies in Europe. There's the Japanese 225 top companies, and the same principles apply. You use yesterday's point of control as today's target, and field of play is the blue area, dark blue area, and then you look for other outstanding points of control as further targets. There's the Australian 200, same idea. Yesterday's point of control, which becomes today's target, and there's your field of play, the dark blue area. So let's hope something's happening on gold. Yes, something is happening. Price is going down. It's although it's a green candle, the price is lower than it was. So it's having to battle to get through that that strong resistance there. I think when I finish this session, I'm going to go back and see when I'm going to look at when that resistance was created and see how far it goes back and how strong it was, and maybe put some further information on the chart.
So that line that it's hitting, that's a previous high or something that you've marked on your chart, right?
That's a previous high. Yeah. I was back testing, and what I was actually looking for was any outstanding points of control, and I found that there were none. There were no outstanding points of control, but there were situation. I'll just have a quick look, see if I can find out if I can just find what I was looking at before. I'll get rid of the matrix and the indicator, give us a cleaner. Yeah, there's there's one of them. That's the most recent one, which happens to be up at 2071, and that was a high that happened on the 10th of August. 10th of August 2020, by the way. And I worked, sorry, that was the first one. I then worked forward. There was another high. There was another high. There was another high. I missed that one for some reason. But and there was another high, and there was another high. So we're looking back as far as August 2020, and that's where that previous high came from. So I was actually looking for outstanding points of control, but there aren't any. There aren't any above today's current price. There are some below, as you can see here. These are outstanding points of control from, and this one is from the 16th of December last year. If we go out, we might pick up a couple more. Yeah, there's one there, there's one there, one there. So there are four. And the way I see those blue lines is those are all potential targets. There's one up there, look. Oh, that's today's point of control. Yeah, sorry. I'm looking for potential targets. If you follow Jeff, he talks about PRZs, and that stands for potential reversal zones. So whatever you want to call them, they are very interesting places for price to go to. Right, let's see if we can get a bit of action on this. The reason I wanted to do a 1 p.m. UK time session was it would give me the opportunity to show some real-time action, and it's not happening. Let's go to smaller time frames. 15-minute. Yeah, it's rejecting off this line. didn't make a note of when that was formed, but it's going back quite a way. But it's obviously still valid because it's price is trying to get through it, and it's not doing it. It's not making it. So I think I've waffled on long enough. If there are no further questions, anybody want to make any comments or any queries, I'm quite happy to stay, but otherwise, I have no intentions of waffling on for another, just to fill the time up. So if there are no further questions, I'm going to thank you for jumping on. I'm going to put a recording of this in, well, I'll send out a link for the recording in case people want to look at it afterwards. And otherwise, I'm doing a session at 8:30 tomorrow morning, 8:30 UK time, and that'll be another similar session to this one where we spend some time looking in a lot of detail. So if you want to jump on that one as well, I'll see you tomorrow morning.
Thank you.
Okay, so thanks very much for jumping on. We'll see you next time.
Thank you very much.
Cheers.